It was yesterday, that 500-point swing for the markets or the Nifty as well, intraday itself, and from that 21,500 peak, we're back to 21,150. I don't know how to explain yesterday's price action. I mean, not to say that days like these one couldn't foresee coming in the near future, but one didn't anticipate yesterday itself.
Aisha, look, what was the tone of commentary from last Friday? That the extremes in the market have got created, and extremes, such kind of an extremity rarely last. Momentum was extreme, flows were extreme, and the price action, participation was also extreme. So I'm not at all surprised that markets have corrected. And if markets would have not corrected, that actually would have added to froth, and that would have led to a bubble creation. Now, why did market fall yesterday? You cannot specify it to a particular reason, but say that there was profit booking and there was massive profit booking, and the reversal, I think, is reminiscent of what we see in a bull market, which is that it is very sharp, it is very severe, and before you realize that the correction has kicked in, the correction actually would get over. There was no trigger, both locally and globally, which really ignited this selling. So that means that it was technical in nature, that means it was local in nature, and that means that it really smacks of profit booking. Look at the reversal, the small cap, the mid cap, some of the rank mid cap stocks, they've reversed, and they've reversed 5 to 7%, even 10% plus in some cases from the intraday high. There you go. Look at the reversal, Yes Bank, Piramal Enterprises, Indus Tower, the real darling of market action, IRDA, 120 has come down to 105. So what happened yesterday was nothing else but extremes in the market which got created, and the extremes in the market have actually got corrected. That's year-end phenomenon or routine profit booking. But I think this is a bull market correction. Before we realize it, I think it'll get over.
But the only caveat here is, if you look at the biggest contributors to the fall yesterday within the Nifty, they are not names where you're sitting on profits. So it doesn't really smack of profit taking. It was Reliance, ICICI Bank, SBI, which have done barely nothing as compared to the other Nifty constituents.
No, the small and the mid cap stocks saw profit booking.
Sure.
And the profit booking, I think, was typical, compressed profit booking. The weak, players, they get shaken out. It's like a tree. And when some momentum is applied to it, weak fruits will always fall. So I think it's that kind of a momentum. Where do we go from here, Aisha? Look, the template is that those will come to India, money is there on the sidelines. All that narrative does not change. So just because you've had a bad Wednesday does not mean that the bull market is over. That does not mean that FIs will not come back. I guess the extremities in the market were there, and the extremities in the market actually would get corrected. So I think in the medium term, when I say, in next 2-3 weeks, I think markets will stabilize, flows will come back, because the template does not change. Having said that, I think for the year, I think we may well have peaked out.
Yeah, and just to underscore the point that you're talking about in terms of the technicalities, yes, India VIX also hit a 8-month high yesterday. The derivatives volume were the highest that we have seen in at least a year. And the fact that the RSI for Nifty, mid-cap and small-cap was trading above 80 for the last many days has finally cooled off. So they're out of the overbought zone yesterday, and that's the kind of shakeout we're talking about. And globally as well, we saw the rally reversing quite a bit. In fact, the US indices reversed the 9-day gaining streak. Also had the biggest single session decline that we have seen in S&P, Dow, Nasdaq since September to October. But of course, they've rallied almost 14-15% from those levels. So 1% retracement is par for the course. So that's how the global setup was as well. And then we saw the FI flows as well, wherein there was a outflow in terms of the FI data to the tune of around 1,300 odd crores, while the DIIs, they again were the saviors of sorts, because they pumped in almost 4,750 crores. Of course, Nikunj, yesterday the data was skewed by a lot of those block deals and QIPs, etc., and all of that. Not QIPs per se, but the block deals and large deals that were happening. But overall, do you think FIs will come back this year? It's only likely to happen in the coming year now.
That's anyone's guess, but if you look at the history says that the last week typically is not a week which is a very active week in the market. And we've seen that whether it is year-end correction, whether it is seasonality, whether it is everyone going on a holiday, typically the last 7-8 days are not news heavy, they are not very heavy in terms of the global commitment. My limited point here is that why did markets rally? Markets, one big reason why markets have rallied is because of flows and because of foreign institutional investors and flows which have come from global investors. Will that template change in Jan? The answer to that right now is no. I look at the market in simple terms, which is that the downside in the market does not look large and the upside in the market in the near term looks limited, which means that we are likely to settle into a range. Look, we've gone up almost in a linear manner from October. It's a double-digit gain for benchmark indices. It's a double-digit gain for small and mid-cap stocks, and that gain may just get you may actually see skim from the top. So the extremities in the market, I think, will get challenged. You may not see a lot of momentum in next couple of days because there is a truncated week next week. There is an FNO expiry. Open interest is high. You may not see a lot of follow-up buying. So I look at the terrain in the following manner: that for the year, I don't think you a lot of follow-up buying, and you are unlikely to see a lot of downside also, because at lower levels money will come. You have to come back and take a fresh guard in the month of Jan. That's where I think allocations will start coming back, and that's where I think you will see large cap stocks start outperforming. I continue to maintain that view, which I'm maintaining from 2-3 weeks, that it's time to shift 15 to 20% of your capital from small and mid cap stocks to large cap stocks. That's where I see margin of safety, and I think that really may be the template for first few days of Jan. Also, when flows will come back, they will move into large cap stocks.
Yeah, and don't be spooked by the price action yesterday. We were